Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. We've got a very full program for you. As you all know, there is a lot going on. We're going to be talking about the IRS tax deadline extension, the PPP pending extension, get into ERC, talk a little bit about an IFR that just dropped today. So it is absolutely a sprint week. And let me just cover a couple of housekeeping items before I introduce today's panelists. First off, you can earn CPE by responding to 75% of the pop-ups. You've got that toolbar at the bottom where you can download today's materials and ask questions. And if your browser does freeze, please refresh it. That will help with the performance of the platform. So you know all these presenters. We've got Barry Melanson, the leader of the profession, with us today to give his perspective on all that's going on. Mark Peterson, who leads advocacy. Lisa Simpson, who you all well know, leads the firm services area. And we've got April Walker here, who's going to provide us the tax update. So let me just bring Barry right up and let's get into it. Barry, we've been looking at this slide for a year, and there's a lot of reason for it. I mean, this past year has been one of the biggest public-private partnerships in the history of the United States. We've been dealing with the pandemic, the healthcare partnerships between the public and private entities, and on the economic side, the firms have played a huge role. And this past week just highlights what it's all been about, because there are tremendous discussions going on. There's progress being made, but there's things that still need to be adjusted further. So I know you've been as busy as ever. So why don't you talk a little bit about what's going on with these key stakeholders?
Yeah, and it's not me that's been busy. We all been busy. Everybody on this town hall, everybody that's participating, our team, and frankly, lawmakers and government employees as well. Eric, I thought your lead-in was perfect because, frankly, if I think back over the last year, just barely over a year, the public-private partnership, the broad ecosystem, maybe this week was, maybe the first time through a year ago, there were a few weeks that were a greater ecosystem environment than today, or this week. But this week is pretty intense and moving parts, not everything breaking the right way. And I would just say that as we deal with all the different moving parts, and I think this goes for our team, but it also goes for people in DC and people, on this town hall. Now's really the time to make sure we keep attention on the taxpayers, the business people, and that's a message we're delivering in every one of our interactions. That it is about what the environment can do to help these people who are working so hard to survive, not the other way around. And I think that that's a really, really, really critical component.
Yeah, well said, Barry. And one thing that I feel as we go to this next slide, and we can bring Mark Peterson up, is I feel that we are very well informed. I mean, there's things that we don't know. There's things that we think need to be corrected. But this intense effort over the past year with the firms and with the stakeholders has put us in a position to really manage through this week. I mean, it's different. It's a little tiring now. We're 1 year into it, but it is quite different than last April when we were trying to get our arms around a lot of these business relief activities. And also, you've got normal things like the tax planning season and tax filing. But let's first just talk a little bit more about this pretty big development here. We all know that there is a deadline right now of March 31st for this current phase, the second phase of PPP. But some great news out of the House this week, and Barry and Mark, we had Lisa Simpson leading the way there, testifying in front of Congress, and then this great vote of 415 to 3 that occurred in the House. But there's still more work to be done.
Yeah, more work to be done. We have to get it through the Senate, and Mark can comment on that. But all those things you said were correct, and Lisa did a fabulous job representing our profession before Congress. But really, the message she had, which came from our members in every form and fashion, the stories that people shared with us and the importance of PPP to their clients, really was the manifestation of what we testified to and what we've been communicating. And they were so powerful. And frankly, we were so ahead of the game calling for the extension. That's why, we had a bipartisan vote. 415-3 is not happening a whole lot in Washington these days. And I think that it really sort of manifested itself there. But, some of the things that are in play, obviously the deadline, but also the Schedule C issue, which there is an inequity there. And, one of our members, I like this quote, I'll just read it. Gwen Young from Kentucky, talking about her clients, PPP is not an equal playing field. We need to restore equity, meaning we have to allow people who are the early followers of Schedule Cs to be able to amend in some fashion to get the same benefit from a gross perspective, not just the net Schedule C perspective. That still has to be addressed, but we're hopeful, and we'll let Mark weigh in here, we're hopeful that the extension actually will go through the Senate soon, and then we can talk about the Schedule C issue.
No, absolutely. So one of the things, it's been a long year, and we've been talking about these issues a lot, but it's given us also a lot of credibility with policymakers in Capitol Hill. We were out strongly for an extension, hit every congressional office on the Hill, very engaged in the importance, taking a lot of stories up there about how important it was to get an extension moving, again, because of all that credibility we had. Strong vote, obviously, out of the House that's going to the Senate. We do anticipate, the good news is more likely than not, they take care of this next week. There was some concern about some of the authority that the SBA had to, for example, you recall they took a pause for taking processing for businesses with more than 20 employees. There was some pushback from Congress on that. And so they're trying to wrestle with that. The end of the story, though, is looks like we're going to get an extension to May 31st. They've got to work through it. They're not able to use expedited procedures, but in all likelihood, we're going to see that next week.
And then the issue, Mark, on the Schedule C, which may also take congressional action on an expedited fashion. We obviously, and we've heard from many of you, the inequity point, the quote that I just made, and we've shared these stories. I like another one. Sherry Von Brown said, I take phone calls from my clients and they're crying. And these numbers are, in sort of the big, huge, and when we talk about $1 trillion bills, the numbers on an individual small business person's perspective feel small, but they're lifeblood type of things. And we just feel very, very strongly we've got to get that resolved. And we know all of you do, working with your clients. Some good news on that with Congressman Velasquez.
Yeah. So Congresswoman Velasquez is the chair of the House Small Business Committee. She has made public comments about trying to retroactively fix that. We also saw this week on Tuesday, there was a hearing in the Senate Small Business Committee where they focused not only on the extension of PPP, but also in a bipartisan fashion, they focused on this retroactivity issue. So there is a will. We've got to get a political window, and we've got to get the opportunity, which is the next challenge. But we are starting to see people to come together, both sides of the aisle, to look for a fix here.
And we'll be talking more about just kind of where that stands right now with the lenders, the Schedule C, and absolutely we need to get this passed in some way so we can get the retroactive capability, because I think the lenders will support this, but there needs to be a new form issued. There was actually IFR issued on something else earlier today, where we need a new form issued related to this so that it can be done in an orderly process. I mean, there's some talk about you can withdraw an application, or there's all kinds of confusion on how that needs to be done. The best path is for this to be made retroactive and a new form be put up so people can get the increased amount if they're eligible for that.
And the point Barry made about inequity, it's snowballing, right? Yeah. So this is a very hot political issue that is just gaining momentum because members of Congress are hearing from small business people in their congressional districts and in their states that feel that they didn't get, equal treatment just based on the circumstances.
So we'll talk more about that in a few minutes, but let's just move on to another huge topic.
Yeah, Eric, this is one, again, a tremendous amount of activity, and stay tuned because we're going to have an Ask for You here in a moment. But you all saw that the IRS issued a statement about extending, I would say, a limited extension to May 17th off of April 15th. And just to remind everybody, our position has been June 15th. It was the best day to extend to. It's a complicated set of facts. We have small businesses dealing with a lack of guidance on the employee retention credit. If they're Schedule Cs, uncertainty on these PPP and the filings, a deadline looming on PPP that's trying to be extended, not to mention some compression of 2 tax seasons in the same period of time, people in having disruptive things in their businesses. And and then the alliance into the state and questions about services from the IRS, frankly, and all of those things added together, we felt it was right. And we acknowledge some people didn't agree, but we felt it was right for the due date to be moved for the good of the American taxpayer and the voluntary compliance system, and that's a really important part. The IRS did not want to extend, but they made a decision to extend, but they did it in a way that creates almost no benefit. And we've heard from many of you. We're well aware that the estimate not being in the extension, along with other things like trust returns and the like, is just problematic. It's almost nothing. It is something as it relates to, for instance, some of the returns that have the unemployment income limitation, et cetera. But in the same breath, those are returns that are easier to file. They're less complicated tax situations. And many of those people have refunds. And the IRS is encouraging those people to file quickly so that they get their refunds. It's just a disjointed answer. And while we still believe June is the better date, the fact of the matter is, if it's going to be May 17th, it has to extend the estimates, because those same Schedule Cs, those pass-through entity shareholders or partners are just, they're not in a position to do this. And that doesn't even cross the chasm to get to the unbelievable difficulties from a preparer perspective. And that's a piece of this equation as well. We're obviously very, very sensitive to that, and we're advocating for that. But if we take it, and we think Congress needs to be thinking about, and the IRS needs to take it from the overall system perspective. And frankly, Mark, the commissioner, as we speak, literally as we speak, is testifying before Congress.
Yeah,
No, that's right.
We're going to have the IRS commissioner on our future town hall someday. We'll work on that.
Yeah, all we're doing right now, he may not be too willing to come. We'll see.
We'll see. So absolutely, he's testifying today. The hearing started at 2:00. One of the Ways and Means subcommittees. This hearing was really set up, to be honest, on the issue of the deadline, of the due date. And this isn't uncommon, but the night before the hearing, they rolled out an announcement about an extension. Now, one of the challenges that we have, as Barry pointed out, is that there had been a lot of grassroots work that had gone into getting an extension. Okay. So there were congressional letters that had hundreds of signers on them in order for the IRS to provide relief and move an extension. Some of those included our suggestion of the June deadline, but not all of them. And so yesterday, the IRS came out with their answer, which Barry described the issues with it related to the estimators. And that is an issue that is coming up right now at this hearing. There's a lot of thanks that are going on for the extension. But there is concern about those that file estimators. And so if we could go to the next slide, one of the things that we really, really are going to need from this group, and this is a call to action, it's a real call to action, is to be reaching out to your member of Congress, your representative, and your 2 senators. And one of the things that's really going to be important is to help them understand the issue, because all of those congressional offices think that they filled what they were trying to fulfill for their constituents by the extension. they're going to struggle and need to be educated about the complexity of, the estimated tax issue. So we've got, if you go to,
I'm going to, just so everyone knows, so this here, Mark, this slide here is where you can, congress.gov is find out how you put your address,
right,
zip code in, you find out how the emails and how to contact them.
Exactly. Congress got
and before we go to the communications, I want to say, and I think it's very important for our members to hear this, the questions that are coming forth and the explanation of this complex environment that has been brought to the members of Congress that are on this committee really occurred overnight. And our staff did a wonderful job, and our members have been responsive to help their congressional offices to understand the complexity so that the right kind of questions can be raised with the commissioner. So yeoman's work overnight, and I just wanted to recognize that.
So you're going to go to the website, you're going to plug in your address, they're going to give you the contact information. And so whether it's a phone call or whether it's an email, and I will tell you on behalf of myself and many of the Congressional Affairs team who are on the end of these calls, it makes a difference. So please don't think it doesn't matter, because calls from home make a difference. And so the best way to go about this is to keep it simple, high level, try and be brief, and also, as passionate as you may be, also understand that the person that you're talking to, whether it's the member of Congress, the senator, or one of their staffs, you're going to know more than they do. So you're going to have to talk them through it. First, who are you? I'm a constituent from this state, from this city, from this location, and describe what it is that your story is about your practice, the clients you work with, how the pandemic has impacted you, how the service at the IRS has impacted you. You've got to set the stage.
And it's really important, Mark, to just insert here. You said it, but I want to emphasize it. Tell the story of your clients, one or two compelling stories.
Absolutely. I think that it's, many CPA firms are small businesses, but talking about your clients and the impact on them, and you're going to be able to do it in a way that they probably couldn't do it themselves, about the circumstances they're going to be in unless the IRS fixes this. Now, as Barry mentioned, we thought June 15th was the best deadline. If that's what you think, add that to your story. If you're going to just focus on the fact that wherever they move it, all of the returns and payment due dates have to be the same, emphasize that. So it's, who am I? Here's my story, and here's my ask. And the ask is have the IRS fix this.
Hey, Mark,
the IRS.
And it's a live broadcast, and we got live questions come in. So I'm gonna bring a couple to you, and we've done this in the past. So some are saying, do you have form letters, other things that you can provide? So just comment on that question.
Not today, like Barry said, we went into action last night. And to be honest, again, as somebody who used to receive these things, form letters are seen as form letters.
Right.
The best thing, and it can be very simple email, it can be a very simple call. You're the constituent. You can't get it wrong, right? So let them know how you feel. Do it in your words and be authentic.
Only I could suggest, Mark, we do in the materials have the AICPA statement that was issued last night or this morning. Sure. That's basically the form letters. So you could cut. We can get that. So you can cut and paste it, and you got a couple of quotes from Barry in that, and you could say, I agree with what has been provided here to make it more easy. But a story is even that much more effective.
And it's very, we're a profession, and this is a time to point out the fact that the estimates were not extended. Sort of doesn't make sense, but to do it in a professional way is a really important way. That staff person who's reading that and is going to get it to their member of Congress, is 22, 25 years old, 28 years old. They're trying to do the best job they can do. They're not going to be tax experts. And frankly, we've talked about in other town halls, this is a time for us to have this professional calmness about us as we deal with clients. Well, it's the same thing is true with the IRS and Congress, is to make the point. And Eric and Mark made the point that you can use this other material But I can tell you from doing this for decades, the most powerful thing to a member of Congress is something simple and in your own words, telling your own story and saying that you're a constituent and that this is important to you. That becomes very powerful.
Mark, I'm going to give you what, and I just because I know how closely you're working with all the states, and there's a few other comments coming in. There are state society activities out there.
Listen,
So that's and one thing we do with the town hall, we're gonna definitely, we always send out an email summary after a town hall. So we might there might be additional points we make in that letter follow up.
There'll be a lot of follow up. Just to be clear, this is call to action is one item. We're working social media. We're having communications with the media. We are working closely with our partners in the state societies. We're going to keep this up until we get the right answer. So it's going to be all of the above effort. Absolutely, Eric. So really quickly, as everybody knows, the $1.9 trillion bill passed. A couple things that are in there that have come up. There was a provision put in that, and this is an oversimplification, but basically it would prohibit states from reducing tax and backfilling with the $350 billion that went to state and local through the tax bill. That was the intent. The problem is if the states are looking at credits or potential, due date delays or other things, it could potentially be a penalty. Lots of questions. There's legislation that has been started to be introduced by the two senators from Idaho to resolve it. Some of the attorneys general have started to file suits. There's questions about constitutionality. This is definitely elevating very, very quickly. I just got, right before we got on the town hall, a note that Treasury is starting to put out some guidance. So just stay tuned on this one, but there are a lot of moving parts.
And the Treasury starting to put out guidance is good guidance, not bad guidance. It helps in this. So if you read what they've said, if a state delayed a due date for state income tax returns to be in compliance with the delay that's coming from the IRS, which we would hope states would do, that won't be considered a diversion of revenue in this provision, because the revenue ultimately will come in. And so that's a good answer in trying to get states to be able to move as well.
No, absolutely, Barry. And then, the state conformity issue, it's really been a bouncing ball based on whenever the deadline was going to end. It was a bigger issue when we ended up at July last year. We'll see where it ends up this year. This was one of the issues that was of complexity that Barry mentioned when we came up with the June 15th deadline. And then I wanted to mention liability because it's been an issue that we've been talking about in the town halls. We've been really talking about it previously on previous legislation in these town halls as an issue that was under consideration. It didn't make it into the final package. With the current politics, it is probably not going to be addressed, and it is going to be an ongoing business issue. But there is not currently a political appetite in the majority to try and address this, which is unfortunate because the business community is going to need it.
Well, Mark, thanks. It was a great update. We're gonna keep things moving, and we'll have you back during open forum. So thanks for all that your team is doing to make these important extensions occur. So Barry and I we're going to do this pretty quickly here, and then Lisa's going to join and give some latest updates related to guidance. So just regarding lenders, you all know that we launched that CPA loan portal program with Biz2Credit. Biz2Credit does have the most loans approved in the country for the second phase of PPP. 222,000. I can tell you that the 1,000 plus firms actively involved have played a big role related to this. I was on a webinar with their CEO this morning, and he highlighted that. He highlighted that this partnership between fintech and the firms has played a huge role here. And we're gonna talk a little bit more about that in a second. I'm gonna let Barry comment. This is just a slide that shows how the PPP approvals have been flowing. You see a spike. At the start of March, and that's because of some of the Schedule C interest. And if this is extended, there is a lot of interest with Schedule C filers. and we're gonna talk about that. But before we do, just on forgiveness, where do things stand on forgiveness? Here, 178 billion of the 521 billion. This is basically the 2020 PPP program was 521 billion. Now we've got another 180 billion in this second phase, but the forgiveness applications really did slow down at the start of the year. They're picking up a little bit, but I can tell you all of the lenders are very, very focused right now on still supporting PPP. And what's happening here is some lenders have not updated their platforms to support the new Schedule C rules. I think they're waiting to see if this is extended, and they probably will update them when it is extended. Here, Chase, their current platform does not support the gross income. It's still supporting the net, and they also are going to stop taking applications as of. So there's a typo here on the slide, but it should say not supporting the gross income. But they're going to stop taking applications as of tomorrow. A lot of the other national banks are doing similar things. I can tell you that we're going to support applications until the end of March and through the CPA loan portal, and hopefully it's extended, and we'll continue to support them. What we're doing right now is, though, we're going to be supporting it more from a referral standpoint. Biz2Credit is not taking direct applications; they're just taking applications through firms. So if you are a firm and you have a client that needs support, you can even send a note right now to Q&A, and we could potentially connect you with one of these firms that are leveraging the platform. And there's just going to be a lot more about how we think about the firm fintech partnership as we move to this next phase of Schedule C. So Barry, I want to bring you and I'm going in to comment on that, and because we've talked a lot about how best to support these underserved, and this is what this extension is all about.
Well, I mean, just a statement you made that, others are shutting down. They haven't made the modifications. The partnership that we have has made the modifications, is fully operational, has had the most approved loans, more than double the two largest banks are added together, more than the two largest banks. It's just an incredible story. I think if you're listening to this town hall and you're not doing PPP, or maybe you're the CFO of a company or a firm that's working with banks and not going through the portal, you still should be incredibly proud of this profession. If you think about the average size, how this profession has mobilized to really connect very small businesses, Schedule C filers, many of them in underserved parts of the communities. It's just been an incredible demonstration of the really significant impact that this profession has in every size business in this country, and therefore the economy as a whole. And so even if you've done zero PPP loans or totally not even paid attention to the portal activity, I think you should be very, very, very proud of the profession. And Eric, Biz2Credit and the team that's been supporting this should be very proud of it as well. This is a great story about this profession's connectivity to every size business.
Thanks, Barry. And I want to we're saying a lot of things very fast. Right now, actually, Biz2Credit is not taking direct applications. They're only working through firms and a couple of their partners.
It shows how significant the firm part is that's the way they're going with it.
That's right. And what we're going to, so we're going to move to Lisa's section. What we want to do in this next phase here, we're all about controls and processes. And we want to make sure these Schedule C applications are done correctly. And I think one of the best ways to get them done correctly is through this firm fintech partnership. So Lisa, any comments just kind of on error codes? There are all those, the error codes were done for a reason. And yes, there's still a lot of applications stuck in error codes. We get those emails, applications that have been, and they could be through the CPA loan portal. They could be through Chase or any bank, stuck there for 2 months. That's another big reason why they need to extend. So Lisa, any just comments on all of these lender activities and the processing of these loans?
Thanks, Eric. Yeah, I talked in my testimony about those hold codes and people getting caught in loops. So we've certainly tried to make Congress aware of it, which is a big part of why we're advocating for the extension. I want to hit a couple of points on forgiveness really quickly, because I do see some questions coming in about what's going on with forgiveness. Question on whether or not any 2 million and above loans are getting through. They are very rare, but they are making it through occasionally. And then also got a question about a $92,000 loan that had been submitted for forgiveness, and the SBA came back and asked for all kinds of supporting documentation, tax returns, loan agreements or lease agreements, copies of canceled checks. And the bar is asking, is that normal for a loan that's $92,000? What we're hearing is that currently the answer is yes. The SBA isn't quite prioritizing auditing loan forgiveness based on the loan size. They're kind of doing a random sample right now. So you may have a very small loan that gets picked on for forgiveness. So just a heads up there.
Well, and that's what the one thing we've been saying, even in this round, we say it all the time, there's going to be third-party reviews of all the applications, small, large, and it doesn't matter if there's a safe harbor. So, keep good documentation. And there's another important reason why these small businesses should be working with firms. So Barry, we're going to move into Lisa's session. Any concluding comments?
No, let's get into some of the details, and we'll pick back up in the open forum.
Thanks.
Okay, you guys, I'm going to talk fast. Again, I know y'all are getting used to it, but just a couple of points before we get started. A 26-page IFR dropped a few hours ago. I've read it. It mostly implements, well, as far as I can tell, on first reading, it implements the American Rescue Plan Act. That's a lot of what we're going to cover today. The Rescue Plan Act makes slight modifications to the PPP program. So it's dense and not earth-shattering, but I know that it could be important to some of the borrowers who might have expanded eligibility. So I'll talk quick. You've got the resources in the deck to refer to. Make sure you download the slides so that you've got these to refer back to, because I'm going to hit high level. Summary document that I know you all love is updated for the American Rescue Plan Act. Here's a look at the topics that I cover. Our FAQs are updated for the American Rescue Plan Act as well. So those are available. I think it's up to like 16, 20 pages or so. So we've got that included, and you've got the hyperlink right there to get you to them. If we move into some of the newest information, we got a couple of new FAQs. This one's interesting. It's about the necessity certification that borrowers are asked to do. And they've updated the answer for Schedule C filers using gross income who might be reporting $150,000 or more. They are not able to just rely on that safe harbor. However, an interesting addition to the FAQ is that all second draw borrowers are now able to use that economic necessity safe harbor because of the 25% revenue decline. And one other really quick one, because I know y'all like to keep track of the FAQs, number 66 was added. It talks about what to do if you've got a Schedule C who's in process. Eric and Barry and Mark talked about that. It's going to be tough. So that's why we're continuing to advocate for a fix to bring in that equitable treatment, no matter when you applied for your PPP loan.
Yeah, no lenders that we know of are really, if they've dispersed the funding, they're not going to be pulling it back.
Yeah. So high level look at the American Rescue Plan changes to PPP. We got another $7.25 billion in funding allocated to the program. Got some nonprofit eligibility expansion, an internet publishing organization, and another category of eligible expenses for forgiveness. So if we look at the expanded nonprofit eligibility on the next slide, you'll see that we now have C5, C7, and C8 organizations that are eligible for PPP. There are limitations based on lobbying activities and size per location. So that's a little twist in the Rescue Plan Act. On the next slide, we talk about lobbying activities. This came out in a recent FAQ. And if you've got clients, or if you're a C6 primarily, because C6s are subject to this lobbying threshold as well, the SBA has given some clarity around how they're defining that calculation. So a big deal if you've got organizations who are involved in lobbying at some level. And moving along, high level, internet publishing organizations are now eligible, subject to their certifications about how they're going to use the money and how many employees they have at a physical location. Told you guys I was going quick.
Lots of eligibility increasing, so there's a lot.
Yeah, exactly. So around targeted EIDL advances, we've talked about this in the past. There's an additional amount of funding provided in the plan. The key here is this is all going to be SBA driven. They're not opening up the EIDL advances that we had under the original CARES Act. These are targeted at low-income communities, and the SBA will be reaching out. The program isn't open yet, so just keep an eye on it. And of course, we'll update you when we hear that the program is opened. In other EIDL news, not related to the rescue plan, the SBA announced this week that they are deferring some payments on EIDL loans even further than they originally had. So I've given you a link to a Journal of Accountancy article that will highlight those changes for you if you have an EIDL loan. Then moving on to our next topic, which is the brand new Restaurant Revitalization Fund. Again, I'm going to hit this very high level. The program is not open. All we have right now is what's in the Act. So I've tried to carve out some of the key provisions from the Act. You'll have these to refer back to, but as soon as the program starts fleshing out, the SBA starts building out their resources around it, we'll make sure we let you know. So refer to the Act if you don't see a clarification that you're looking for on the slides, but high level, this is a grant program. So it's not a loan, it's a grant. It's based on basically the reduction in gross revenues comparing 2019 to 2020. And if the borrower got a PPP loan, they can still get a restaurant grant, but that amount comes out. The maximum grant is $5 million per physical location, capped at $10 million per entity. What's really interesting about this program is that it contains provisions that allow entities who weren't in existence when the pandemic began a year ago to be eligible. So something to keep your eye on there. The next slide will look at all of the different eligible entity types. So it's a very long list. And also a quick look at some of the ineligible entities, publicly traded and applied for and received a shuttered venue operator grant are two of the biggest ineligible criteria, and also if there are more than 20 locations. What can the fund be used for? Lots of different expense categories that are available, and there is some SBA leeway in the program as well. The covered period for this grant is very generous, February 15 of last year through December 31 of 2021, with the SBA being able to extend the program if needed. Here's a key caveat. If the funds are not used on eligible expenses within the covered period, or the entity ceases to operate, the funds are required to be returned. So documentation is going to be important, and looking at that covered period. But again, it's a very generous covered period so far. And now we'll switch over to the Shuttered Venue Operator Grant. I'm going to call it SVOG because it's so much more fun to say than SVOG. So we got up to $16 billion available for this program. The SBA is still not accepting applications. The FAQs are going to be your best friend on this one. The SBA is continuously updating those, and they're pretty well organized and seem very thorough. So check those as FAQs that we've given you the link to. We've also got a good Journal of Accountancy article about some insights that came out this week. Targeted date is early April, as I mentioned. One caveat is that these grants do appear to be subject to single audit for both for-profit and not-for-profit. We've had conversations in the past about single audits, but basically if there's federal funding expenditures of more than $750,000 in a fiscal year, there can be a required single audit. So something to keep in mind there. We're looking to see if a regular financial statement audit can take that place. Okay, so in the American Rescue Plan, there is basically a bridge that was created because it's taken so long for that program to get up and running. They are now allowing borrowers to apply for a PPP loan and then have that PPP loan reduced from any SBOG grant that they might get in the future. So it's a little tricky the way it's worded, but that's basically, think of it as a one-way bridge to get an entity who might be eligible for a grant through until the program opens up by using a PPP loan.
And it makes sense. I mean, right now you take what you know, and you're just learning about the CVOG, or however we're going to say the acronym here, compared to PPP, and then so that I think we know a lot that are taking advantage of the PPP phase, and then we don't even know all the particulars on how to apply.
Exactly.
We're learning about the rules, but we need to know the process on applications.
Absolutely. One key point on our SPOG, gotta have the fun phrasing is borrowers who took out a loan in 2020 for PPP can still apply for these grants. So that's some good news there.
Well, Lisa, that was a fantastic overview. And the thing is, you said there's a lot of great materials that you and your team have been putting together. So thanks. And now we're going to bring April up to talk about tax provisions in the ERC. So I'll leave this to you.
Quick shout out to April. April has been a key part of your PPP support team for the past year. So she's just been amazing, and I'm really excited to get to introduce her to our town hall audience.
Yes, I'm happy to be here, and I think the theme of today is we're going to cram a lot of information at you. So moving on to tax world. So I wanted to first talk about something that we've been getting a lot of questions about, both from working in PPP and also working on the tax team, which is where I normally live, about the tax treatment of PPP forgiveness and how that interacts with the flow through of returns and basis. So we know there have been a lot of questions. No guidance yet on these questions, but I did want to share this comment letter that just came out this week, which specifically requests guidance, but I think more helpful, provides some suggestions and some examples about some recommendations. So I wanted to quickly go over those. I have a link to the letter in there if you want to go into the details. So just quickly, we're going to recommend that the IRS in their guidance say that the timing of the tax exempt income be aligned with the payment of the expenses. So that means, you know, for if the expenses are in 2020, the timing of the tax exempt income should be in 2020, just as a general rule, just to, you know, align them in a better way. And next, related to that, so there's been a question about for S corporations, should that tax exempt income and the expenses associated with it, should that be tracked through AAA or should it go through OAA? And we're actually recommending that the guidance say that those expenses and the tax exempt income run through OAA. So hopefully that will provide a better result related to the deductibility, possible deductibility of expenses to help with that problem. And then finally, we've got a lot of questions about the question that's on Schedule B of the 1120S and the 1065 about whether that question that asks about forgiveness of a non-shareholder debt, whether that should be yes, because it is, you know, technically could potentially forgiveness of debt. We're recommending that the answer to that be no, just because that's not what it was originally meant to be about. You go to the next slide for me. Thank you. So I certainly can't go through all of the tax provisions of the American Rescue Plan Act or as we love acronyms, ARPA is the way I like to talk about it. But what I wanted to go over is a few things that you're likely having client questions about or questions yourself about. I have included links there to the resources that are available that go into more detail. There's actually a webcast that's coming up that's going to go into more details also. But just to go over some high levels. First is an issue that Barry mentioned briefly, and that's the unemployment exclusion, the $10,200 that's available for those under 150,000. So again, we're waiting on the IRS to issue guidance and information about that. At this point, we believe it's $10,200 per person, and we think that the AGI is no matter what filing status. But what we need is that worksheet that is in the IRS instructions, and the software providers are going to need that to be able to go through the calculations. I haven't seen that yet. I checked earlier today and I haven't seen it. So, but there's, a lot of confusion about, what to do, how will it work? And then even more confusing, what to do for those who have already filed. The IRS came out with a statement that said, don't file amended returns. And, basically that probably was related to the expected delay in deadline, as well as obviously, as I said, the time needed to update the forms and instructions. So just look for more information. The guidance will come out, and then hopefully it will become a lot more clear. Just to, yes, my caret is incorrect. It's AGI less than $150,000 rather than greater than, so less than. Okay, so just wanted to give you a few highlights on the economic impact payments. Can we go back to the, thank you. Just wanted to, rather than digging into the details of this, which you can certainly read, I wanted to note a few differences from the first two rounds that you're probably receiving questions about. So all dependents are included in this round of payments, rather than just on children under 17. And the phase out limitations are different. And, there is a complete cliff phase out for people. So, it's, what people may be getting might be different. So you might be getting questions about that. And then one other difference is the addition of what they're calling an additional payment determination date. And this can be helpful. I know you probably had a lot of people saying, oh, do I need to file my 2020 return now? Do I need to wait? Do I need, what do I need to do? This provision is helpful for those who might have a lower 2020 year and be eligible. So they're providing this determination date, this different date that is the earlier of 90 days after the 2020 filing deadline, or September 1st. So what they have said is they will pay the difference, either, if there's additional amount or the whole amount on this additional payment determination date. So again, more to come on how that will actually work, but just wanted to bring that to your attention. Again, I'm not going to go into the details of the changes, but there were changes to the child tax credit, the child dependent care credit, lots of enhancements to those, increases to the percentages, that sort of thing. So take a look at those. As far as the employee retention credit, we're still waiting for guidance on the 2021 changes that were from the Consolidated Appropriations Act. And there's a few more changes that came with this ARPA. So some of the changes that related to here are an extension throughout through the end of 2021 for this credit, and then availability for it to go against Medicare. So keep a lookout for that credit. And then the sick and family leave credits also were extended. Next slide for me. I did want to, you can go to the next slide. I did want to highlight a resource that is available related to employer retention credit. It is a recording. I think it's on the next slide. Recording where I go into dig more into the details of the IRS notice and talk about the interplay between PPP and ERC. So you can take a look there. All right. I think that's it for me. Again, highlighting a couple of resources, but you can see those in the slides. So that should be good. All right, back to you guys.
Thanks, April. And a real quick question for you on the stimulus payments. If a borrower doesn't, or if a taxpayer doesn't get their credit, is it available on their next year's return?
Their 2021 return will be the ultimate where that's reconciled. Just like for the first two, it'll be reconciled on 2020. This one will be reconciled on the 2021 return.
Thank you.
Yep.
All right.
Well,
And
April,
April mentioned we do have a webcast actually tomorrow that's going to dig into a lot of these tax provisions in more detail. So you'll see that on one of the slides in the resource if you have a Friday afternoon free.
Well, April's going to stay with us for open forum here. I mean, there's a lot of play in the ERC PPP. There's issues that we need to get resolved still. We want more guidance in the ERC, and there's some things that we still want potentially to be modified related to how the 2020 forgiveness forms are managed. So going to let me just continue on here to Keith. Here's the resources, Lisa.
Yep, absolutely. You've got links to these. They're also on the tax COVID-19 page, so you can find them all there. Yep.
Well, I see a lot of questions coming in just regarding, the portal and what's going on with the Biz to Credit platform. I encourage you to attend these sessions on Tuesdays and Thursdays. We do a full 1 hour. We review the status of where things stand, such as error resolution, processing, a lot of information related to what's going on with the overall SBA process with the PPP processing and also status of any applications, best ways to manage status of any applications that you have in the portal. So with that, we want to bring the group back up. We've got, close to 10,000, 9,000 attendees here today. A lot of questions. We do have a team of about 10 answering your questions. We greatly appreciate them. So, to kick this off, Barry, I mean, there's been questions about, PPP and ERC, and that's something that we didn't get into at the beginning portion related to advocacy. Any comments you want to make on that?
Well, we've been advocating very strongly to get the guidance out on ERC. We think that's very critical. We've been communicating to members, and I know members have been communicating to their clients that the ERC is pretty powerful. It was a big part of the bill that allows an additional benefit, can be a very significant one to some businesses. And unfortunately, we don't have all of the guidance to be able to do it. I think, we've covered some of that today. We've been pushing for that. It's frankly, it's dependent on the IRS. I'll just share though, by the way, we're getting some play-by-play on the commissioner's testimony. I'll just share very briefly. He was pressed pretty hard on a series of questions about why estimated taxes were not included. His response was basically because rich people will gain the system. When pressed further, well, what about small businesses? His answer was, well, if they have a problem, they could call the IRS. And before you guys send me comments, because we'll know them, I know many of you would say, calling the IRS is not a easy process, or at least getting responses through the phone calls to the IRS is not an easy process. He was actually implying calling was better than mailing, because we all know there's a backlog on open mail as well. So it's frankly a pretty interesting response. And those comments that we asked you to do to communicate with your member of Congress, I just wanted to reiterate that before we run out of time, because giving you the latest and greatest of what's happening on the Hill, and it's going to be important to make it known to your member of Congress, because that's his response. In fact, At one point, his response was a single word: no.
Well, we got a pretty good call to action here, Barry. And we'll be following that up, as I said, in our town hall follow-up email with more information. Mark, I know there's other breaking news coming in related to the extension of PPP in the Senate.
So in the Senate, they filed cloture, and basically what that does is mean that they can progress. So it's all being teed up. The PPP extension, the things that they have to do to get it done are all in place. So it's moving in the right direction, Eric.
Mark, is that one where you think that our members need to be reaching out to their senators to express their support?
You know what? I don't think, to be honest, after that vote that they had in the House, that's where I would put my energy. I would focus all the energy on the IRS and the due date issue.
Don't confuse the messages. Keep it simple.
No. One issue, focus on that. We're going to watch it closely, but we had that strong vote coming out of the House. This is more just a process deal. They'll get it in next week. It's going to prevail.
Hey, Barry, some, questions coming in, just there's, on, how do I manage through all of this? And I was on a call earlier today with a bunch of firms, and, what they're saying is, wow, I can't, the business is also exploding. I mean, America, the spring's coming, and, and this is, and there could be one of the biggest economic, increases that we've seen in a lot of our working history. So you got things, you got the tax deadline, you got a PPP application, and then you got business growth. So just comments on that. I mean, on how you got to compartmentalize. I mean, compartmentalizing what's going on is important. Your thoughts?
Well, and in addition to compartmentalizing, you got to prioritize. I think that not every opportunity is an opportunity for everyone. I think, there's also great networking and teaming processes inside the profession. It happens in every other industry. It certainly happens in our profession. And I know particularly small firm practitioners are always fearful of the loss of a client if a piece of the business is shared with, let's say, a firm that might be specializing or focused in a different area than your firm. There are ways to work around that. There's some guidance we have in PCPS on how to do those types of arrangements so that the client relationship doesn't evaporate from one or the other people involved. But frankly, smaller firms have to focus right now on, the clients that are going to be that recognize the long-term value of the relationship, and the clients that have and the areas that the clients really can benefit from. And I think that's tough because it's got so many opportunities. And I'll come back to the teaming process. I think that's really probably the best opportunity. And look, I think even larger firms, if let's say you're a 2-partner firm, a firm that might be a 10-partner firm, there are ways to work with those firms in a way that is conducive and not risky to your 2-partner firm practice. And it takes a little, back to our first slide about ecosystems, it takes really work in the ecosystem.
Well, Barry, I think that's a great way to conclude. I mean, it really has been. It's been a year activity. It's about teaming. It's about the public-private partnership, and it's about the details of everything we've done, and just the team, Barry, under the AICPA, how hard they've been working. What April did today, kind of talking about ERC resources, the ongoing activities from Lisa. Mark, there's one last. We have very little time. There's just a question. Can you repeat the website that they can go to for their congressman?
Well, you're going to show it in a second.
That's right. So, let's go back to the slides. Thanks for the
remember.
Mark. That's right. All right. So we've got the recent town halls. We had a great town hall last week on accounting for Triple P, as we sometimes like to call it, by Bob Durack. That was well done. Lisa's already mentioned this. We've got that was what I just mentioned, the March 11th special edition. So watch that if you have not, that archive. You've got the PCPS resource here. So many updates occurred over the past few days. So check those out. This is a broader PPP resource section based on all that we're doing with the portal platform. And we're staying active on social media. So always stay tuned to us through that channel. And here it is, Mark. So it's congress.gov. Go there. the right-hand side, put your address information in, and they will tell you how you can email and call your representatives. Mark?
Absolutely. Thank you. Everybody do that. It really, really does make a difference. I know sometimes it feels like it doesn't, but we know on our end that it does.
So thanks, Barry. Thanks for all of your comments today. Thanks to the team. And we'll be back with you on April 1st. That's just how the next 2 Thursdays from now, it falls on April 1st. We appreciate being with you. We greatly appreciate your input and your comments. So hope you have a good end of this week. And we look forward to staying in touch with all of you on all of these different activities. Thanks.
Thanks, everyone.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.